And next thing is retirement. What is retirement and why do you want to go for a retirement? Retirement could be various reasons. You have added an asset, you are still using that particular asset, but for some reason the asset got destroyed. Okay, or you want to sell that particular asset, or there is some other issue with the asset wherein you are not able to use that particular asset in future. So in those cases, you want to retire that particular asset or close that particular. I mean, in layman terms, it is called closing of that particular asset, so that system will stop calculating depreciation on those assets. So how do you do a retirement? So we'll just pick up any one asset and we'll do a retirement. Pick up this particular asset. Click on retirement button. Okay. What is the cost of the asset which you want to retire? I want to retire the entire asset. You can also do something called partial retirement, but I want to do retirement of entire asset. Enter the cost of the asset. Okay, and click on done. Okay, so the asset is retired. Retired. Now, okay, if you this is the asset which you have retired. If you click on retirements, F11, control F11, you can see the status is pending. Okay, once the retirement is done, at the end of the month, you generally retirement is also part of a normal data entry transaction. At the end of the month, when you run your depreciation, there is a program called calculate gain or loss. So once the retirement is done, you need to run that particular program so that the status changes from pending to success. So that's the requirement from Oracle. So when you're running a depreciation at the end of the month, automatically the depreciation program will take care of running your calculate gain or loss. But now in the testing environment, now if you want to see the impact of that, we can manually run the calculate gain or loss program, only just that particular program, or you can again run the depreciation program, which will take care of triggering the calculate gain or loss, and then come back to this particular screen, and then you will be able to see the status as from pending to you should be able to see the status as success. You can directly run that particular individual program, go to depreciation, calculate gain or loss. Okay, it's completed. Click on view output. Number of success is 1, number of failures is 0. So that means that is successfully processed. Go back to that particular asset workbench. Query for that particular asset. This is the asset. Click on retirements. Click on F11, control F11. You will be able to see the status as processed. Processed is nothing but success. That retirement is processed. If for some reason, if you want, and also you observe here, the system has calculated the gain or loss. So this is my cost of asset, 100,000, 100,000, 500, and there was a depreciation on this particular asset. If you remember, the depreciation was something 8,800 or something like that, 8,875 or something like that. Okay. So my net book value of the asset when I'm retiring this particular asset is 92,125. That is 100,500 minus 8,575 or something like that. So the net book value of asset is 92,125, and that entire amount has gone to the gain or loss, 92,125. If you do not want to process this particular retirement, you got something called reinstatement. You can see a button called reinstatement. Reinstatement is nothing but reversal of the retirement. You want to reverse the retirement transaction, whatever you have created. So you can click on reinstate. Before I do a reinstate, I just want to show you something. Go to the financial inquiry. Here you can see everything is 000 because the asset is retired. Okay. Now try to reinstate this particular asset. Click on reinstate. Reinstate this asset. Yes. Save this. Again calculate gain or loss program. Wait for the program to be completed. And once this is completed, you can again go back to the asset workbench. There you will be able to again see the asset cost. Once it is retired, the asset cost is 0 because there are some entries which are created in the background to move the cost from that particular cost account. And once this is completed, now you should be able to see the asset cost of 100,500. It is completed. Go back to the asset workbench. Go to financial inquiry. Here you can again see the cost of the asset 100,500. And YTD depreciation, accumulated depreciation are blank because you made some changes. You can see all those under cost history. You can see all those changes. You did a full retirement, again you did a reinstatement. You again run a depreciation, and then you'll be able to see the depreciation amount for the particular asset. Similarly, you can do something called mass retirement also. Mass retirement is, as I mentioned like earlier, we have seen mass transfer. So similarly, you can do a mass retirement going to the mass transaction screen. Mass transactions, retirement, create and reinstate. Okay. You can select the book name. And you can again select the criteria. What assets you want to do a mass retirement. Computer, software. Okay. You can select this particular criteria and click on create. So when you click on create, it is actually again you got option create, review, and then retire. So creating is the first step. The concurrent request got triggered, and once the request is completed, you need to come back to this particular screen. Create, this is completed. Come back to this particular screen. F11, mass transaction number. Okay, click on retire. Okay, you should have already reviewed the report which will give you the details of the assets which will be retired. So there are 5 assets which will be retired. If you want to retire that, go back to this particular screen and click on retire button. If you want to discard, just click on discard. I don't want to retire that because if I do a retirement, then I will not have any assets to move further. So I just want to discard this. It is discarded. So this is how you can do a retirement of the assets in a mass way. Similarly, mass transfer, mass changes is also another functionality wherein you want to change the couple of things like your if you want to change the what you call your depreciation method prorate convention for couple of assets. Okay, so take an example, Reliance Corp. You want to pick up all assets under computer software. Okay, and then pick up all those assets under computer software which has got the prorate convention of following month, change it to prorate convention of same month. Again same story, save this, preview, and then retire, run. So it will in a mass way for all the assets. I mean in our case we have got only 4 or 5 assets, but in a live environment you got hundreds of assets. In a mass way, system will try to change the prorate convention for all those assets under asset category of computer software from following month to real same month. Similarly, you can use all other fields also. You can make a changes of all other fields also in a mass way. And another thing is now we have seen the corporate book. Then I will also show you something called tax book. First, we need to create a tax book, and then we will run the periodic mass copy to move the asset from the corporate book to the tax book. So first, we need to create a tax book. Setup, asset system, book controls. So this is my tax book. Select the class from corporate to tax. So Reliance tax book and associated corporate book. So this is what I was saying when I'm defining a corporate book. This field has got significance only for the corporate book. So if Reliance tax is my tax book, what is my related corporate book? So when I'm running my periodic mass copy, so there is actually a drop down for the book to be selected. So that particular drop down is actually driven from this particular screen. So for the Reliance tax book, what is my associated corporate book? Reliance corporate. Okay, you can have any number of tax books, there is no limitation. Okay, for you can have one more tax book by name Reliance tax 2, and again you can link that to the same Reliance corporate book. You can have one more tax book by name Reliance tax 3, and you can link that to the same corporate book. Okay, and it is linked to your Reliance INR ledger. Do not check this particular checkbox. As I mentioned, that if you check this particular checkbox, you are pushing the FA data twice to GL, once from AP, so once from AR, sorry, once from corporate book and once from the tax book. We should not be doing that. So do not check this particular checkbox and select all other values. Current period October. Leave all these blanks. National accounts. So mention the national accounts whatever we are using. 7850. 7851. Clearing account is 1247. Cost of removal 785253. 7852 7853 22440. Net book value retired 785455. 7854 7855. Revaluation reserve retired. We are using same 785455. Deferred depreciation 2540 7860. Depreciation adjustment 7860. And default account generator. And there is a last tab. There is an extra tab which is not there in the corporate book. In the corporate book, we were able to see only these three tabs. In the tax rules, we got one extra tab. So allow mass copy. You want to copy additions, adjustments, retirements from your corporate book to the tax book. And there is something called allow CIP assets. Whether you want to, I will explain you what is CIP assets. And we will not be generally using these things. Allow CIP asset, allow mass copy, and you want to copy the adjustments and additions, retirement from your corporate book to the tax book. So check those check boxes. And all of these are default values. Close this. So now we have created one FA tax book, and for the FA tax book also we should complete the asset category. For the same computer software, we need to complete the accounting part for the Reliance tax. That is where we mention the different depreciation method. So just press down arrow. This is not computer data person, right? Okay. Computer software is our yeah. Put your cursor here, press down arrow, and create a row for Reliance tax. It will be generally same accounts whatever we have used in corporate book. Okay, and Save this. So click on default rules. So this is where you need to mention the depreciation method. So what will be the depreciation method, straight line or written down value?
What
Straight
exactly
line.
is there on the
Sorry,
NBV.
it will be written down value method. If you remember, I mean, you can even assign the straight line value also. But as I mentioned earlier, generally the main reason for going for a tax book is you want to have a different depreciation method in tax book compared to that of the corporate book. So we will select Reliance NBV method. Okay, and what is the rate? So I'll go for say 20%. Okay, and what is the prorate convention? I'll go for same month. Okay, save this. Okay, now in general the process will be you complete the data entry in corporate book, whatever the retirement, revaluations, reclassifications, or addition of assets, everything in the corporate book. Run the depreciation for the corporate book. And ideally you close the period, but in the current scenario will not close the period. Okay, ensure the depreciation is completed, period is also closed, and once this is done, then you run your periodic mass copy program, which will copy the assets from your corporate book to the tax book. The reason why we are running this after closing of the corporate book is to ensure that no other assets are again added in that particular book. So ensure that all the data entry is completed in corporate book for the period of October. Close the period. Okay, closing a period is just check that particular checkbox. Okay, and once that is done, you run your periodic mass copy program, which will copy all the assets from your corporate book to the tax book for the particular month. And in the tax book, again you run your depreciation program, which will calculate the depreciation in tax book as per tax law, which is nothing but as per the depreciation methods which is assigned under the tax book. That is, in our current example, it will be NBV method. And then close your depreciation period in tax book. So that's the process. And then you can run your reports out of your Oracle to check the depreciation calculation as per your tax books, and you can do the manual calculation of income tax, whatever I said, or for the local tax reporting purpose also you can use those reports. So now we are at a stage of, we have completed the data entry, we are running the depreciation process in corporate book. We need to ideally close the corporate book, but we are not closing, that is fine. And then we need to now run the periodic mass copy program. And as far as the periodic mass copy is concerned, there are two mass copies. One is the initial mass copy and other one is the periodic mass copy. As the name itself says, initial mass copy is the program which you run only once, that too for the first period when you are copying from corporate book to the tax book. Going forward, you should be running a periodic mass copy. So in the current example, as we have created the tax book just now, we need to run the initial mass copy, and going forward for the next month you should be running only periodic mass copy but not the initial mass copy. Okay, go to navigation tax, initial mass copy. So what is the book for which you want to run that? Reliance tax book. So what is the period, what is the tax book into which you want to copy those assets? Reliance tax book. So select that, click on OK, submit, wait for the request to be completed. And before it is running, you can just go to the asset workbench, select Reliance Textiles or Reliance Tax. You should not be able to see any assets. Oh, there are assets. So that means looks like the program is already completed. Okay, the program is completed. It is completed in warning. I'll explain you why it is completed in warning. So it is completed, and hence you are able to see the assets. So now check the output why it is completed in warning. Okay, this is success. This asset is success. This asset has already been added in the tax book. This is success. What is it? This assets category is not set up for this tax book. So this is my asset number in the corporate book. Okay, first one is success, that is it is transferred to your tax book. You should be able to see that 168572. Second one is says 168573. This assets category is not set up for this particular tax book. So for this particular asset, I used a asset category of not computer software. I think computer database processing or something like that. For that particular computer data processing, I have did that accounting and default rules only for the corporate book, but not for the tax book. And hence it is throwing this particular error message. Now you got two options. One option is if you really do not want to, there are some practical business scenarios wherein some assets, for some reason, business users do not want to copy it to the tax book. So for those things, the option would be do not set that particular asset category under the tax book, then system will not copy that. And if your business reason is no, you want all the assets to be copied, then go there. Now complete that particular asset category set up for the tax book, rerun the mass copy, then system should be able to copy even this particular asset also. So this is success, this is success, this is success. And this says this asset has already been added in the tax book. 170572. 170572. Why it is already added in the tax book? Let me check the record history. Okay. I think as part of my testing earlier, when I'm testing something, I think I ran this particular program. I think that's the reason why a couple of the assets are already added. These three assets were the old assets which were already added. Okay. Anyways, initial mass copy is a program which is actually copying the assets from corporate book to the tax book. Now we'll pick up one particular asset which is success. Use this. The first asset. Go to the financial inquiry. Here you can see this is the corporate book. Put your cursor here. Tax book. Here you can see for the tax book, depreciation method is Reliance NBV. For the corporate book, depreciation method is net book value. Okay. Now try to calculate the depreciation in tax book and let us see how these values will look like. Okay. So you should select Reliance tax book. So you need to run the depreciation process for both corporate book as well as the tax book. Now for that particular asset, we will also do a manual calculation and check like how system has calculated the depreciation amount. And if you observe that once the depreciation program is completed, there is also the last program which is getting triggered is journal entry reserve ledger. So for corporate book, the name of this request which gets triggered is journal entry reserve ledger. For tax book, it will be tax reserve ledger. And in that particular report, you will be able to see all the assets for the particular month, the cost, accumulated depreciation, depreciation amount, and you can use this particular report for your reconciliation purpose, reconciliation between your FA and GL. I mean, obviously, we will not do that particular reconciliation for tax. We will do that for the corporate book. So for the earlier corporate book one, you can see, click on view output. You'll be able to see the cost of the asset, depreciation, YTD depreciation. Depreciation reserve is nothing but accumulated depreciation and the totals. Okay, tax reserve ledger is also completed. Click on view output. You will be able to see the cost of the asset, depreciation rate. Okay, we'll pick up the first asset and check the depreciation calculations. So the first row is for the corporate book and second row is for the tax book. Okay. 333.34 is the calculation what system has done. Okay. 10,000 multiplied by 20% divided by 12. That's the calculation. 10,000 into 20%. This is for 1 year divided by 12 is per month. 10,000. 2000 divided by 12, 166. It is showing 334. It is exactly showing double. Let us pick up some other assets.
Arvind, I think the date placed in service is 30th September, and we used same month.
Exactly, you are right. So that particular depreciation calculation is for both September as well as October. It's a very good catch. Yes.
Yeah.
And now pick up next asset. Okay. 15,000 multiplied by 20%. This is for 1 year divided by 12, 250. Okay. Date placed in service is 1st of October. So for it is starting from 1st of October 250. In the corporate book, I think everything is zero, because I think in the corporate book, I think I would have retired this particular asset, or I did not run the depreciation. Anyways, okay. So as far as the tax book is concerned, this is on the same screen. You should be able to see the depreciation for both corporate book as well as the tax book. And in the tax book, you can see the depreciation calculation. So it is doing a depreciation based on the net book value method. And as far as the corporate book is concerned, it is doing a depreciation based on the straight line method. So any questions on this? Before I proceed with the last topic, creating of CIP assets.
No.
No.
Okay.